It was a terrific quarter. Stocks up 27% in 12 months. 12 analysts cover it. They got an overweight with a $17.5 price target. But still, given you've driven sales from $700 million to $1.1 billion nearly in a couple of years, how do you get more respect from Wall Street?
Hey, Brian, first of all, thanks for having me. Good to be up. A lot of great stuff to talk about. We really like our position. I think the underlying value of the company is, as you mentioned, is transformationally different for Hostess. Our capabilities are better. We've transformed the portfolio with the acquisition of Bortman, leading sugar-free business and growing at nearly twice the rate of overall cookies. And iconic Hostess is in snacking need states and occasions that are growing at a greater rate than overall snacking, and snacking is growing greater than food. So as you mentioned, we're growing in the top quartile of our peers, at margins at the top quartile of our peers. And I'm confident over time, the underlying value of the company will show. And with all of those great results in the past, our future's better. So I think there's a lot of respect that'll come, and continuing to perform at the way the Hostess heroes and the team's doing, it'll come over time.
Well, talk to us about the future, Andy, because, you know, we talk about a company like a Peloton or a Zoom, and everybody said, oh, we're going to, get on an exercise bike at home and we're going to Zoom and those. But I think you are actually the greater work from home stock. I mean, the reality is we know that people they wanted to enjoy things. They wanted to have their treats because it was a lot, and I almost use a different term, of stress. Obviously, in the past year, for a lot of people, many kids are home, maybe not in Kansas, but on the East Coast, they're home all day long. How do you see consumer demand evolving as much of the country gets back outside?
Yeah, I think consumers snack differently, but they're continuing to snack and increase snacks. They love comfort and highly reliable, trusted, high-quality brands, of which Hostess is. And before the pandemic, snacking was increasing. Now, the way consumers snacked, as I mentioned, was different. They were snacking on smaller, more joyful occasions. We'd like to bring little moments of joy to consumers' lives. Sweet snacks in the morning are increasing, snacks in the afternoon, and with new products, we're snacking at night. So we have a portfolio that was grown before the pandemic, and over time that accelerated. The in-home snacking occasions, I believe, I know they've elevated during the pandemic, and I believe that stay-at-home behavior and snacking is going to stay at an elevated level outside of the pandemic. A perfect example, consumers are already moving towards a trend of movies or Halloween at home, small gatherings at home. They've invested a lot in their home recently. Those behaviors and rituals are going to continue. We're going to want to enjoy them with well-known and trusted brands that they really enjoy, like Hostess Twinkies and cupcakes. During Halloween, one of our largest occasions, we had a theme around Bring Halloween Home. That was already a trend before the pandemic. It accelerated during the pandemic, and it's going to continue afterwards. As consumer mobility comes out too, our convenience store business and our media consumption business is going to accelerate as well. We're well positioned for growth from this point.
And well capitalized, obviously, Andy. Before your time, Hostess, we covered the bankruptcy about 10 years ago. There was some ownership changes there. You had private equity in, some private equity out, some private equity back. From an investor's perspective, do you feel like you need to convince them we're capitalized? This is not the old Hostess. This is us.
Our free cash flow is one of the best in the industry. When we bought Bortman, our leverage went above 4 times. We're already at 3.6 times, and we'll delever to about 3 times by the end of the year. We're a very strong company with leading margins and leading growth. So before the bankruptcy, that was a whole different company. We came out, and one of the benefits of the bankruptcy for investors today, any of those liabilities, they're no longer with us. We're very clean. We've invested in the best infrastructure and resources, whether it's IT, took the best manufacturing facilities, iconic brands, and reinvented an efficient and highly profitable company underneath it.
Shepard Smith here. Thanks for watching CNBC on YouTube.